Well, I've been calling for $12 silver for a number of years now. It still has not happened. I think the lowest low we hit was somewhere around $13.40 or so on any given day. And in order for this market to turn around, we definitely would have to see more upward momentum, and we would have to see 52-week highs being broken, and we have not been anywhere near that point.
Our number one investment idea for 2016. Trading at 1 times 2016's estimated revenue, this tiny stock is now partnering with billion-dollar giants, filling the huge void left by Motorola to a potential $10 billion market. This company has attracted significant shareholders in its industry and a fund that has close ties with the Disney family. With an enormous 60% insider and management ownership, this small company is becoming a cash gusher very quickly. Learn more about this 30-cent stock at crushthestreet.com/win.
Hello everyone, and welcome into crushthestreet.com. I'm Kenneth Amaduri, and I'm joined today with David Trungale of tradertours.com. He's a technical trader, and he personally, as well as his subscribers, made money shorting silver. This was a very big call, especially when he came out and said he's going to short it at $25 after it had come down substantially from its high of roughly 50. And he went against the grain, and he was right. And he's a returning guest. And I'm interested in talking with him today because, for me personally, I like to talk to these technical traders to see what they're seeing and then compare it to the research that I'm doing in the economy and see how the correlations can be made or if it can be made at all. So, David, thanks so much for coming on the show with me today.
It's my pleasure, Kenneth. Thank you.
David, let's start off with some of the global markets and the charts that are being put out by a lot of researchers out there. And if you've seen some of these charts, you would see that a lot of them are breaking downwards. We're seeing ascending bearish wedge patterns, and you might be able to shed some light on that better than I can. And many of these guys are taking this as a technical sign that the global markets are in for a major correction. What is your thought on this?
Well, I would say we've already corrected somewhat. Now, the tougher call is going to be figuring out where we're going into the future. And when you're talking about these wedge patterns that essentially you have a market that is condensing, anytime you have a chart that has a very restricted pattern, usually one of two things will happen. One, it will either break out to the upside violently, or two, it will break down to the downside violently. And when you look at the U.S. equities markets, I hate to sound like a broken record here because I've been saying this for several months now, but I'm not at a point where I can really make an accurate assessment on that. I would say the jury is still not out as to whether or not this bull market is officially over. But as I'm studying this pattern, another possibility, obviously I want to make sure I don't leave any stones unturned here. This is something very few analysts will talk about, the possibility that the Dow Jones will simply continue to trade sideways or trade in a neutral pattern too. And I've tried to highlight this theme with my subscribers, talking about how I encourage people to avoid extreme thinking. I'm not saying that extremes do not happen in the market. I've witnessed some pretty crazy things over the last several years, but at the same time, I don't like people to, be led to believe that they're going to wake up and you see the Dow Jones selling for 40,000 a share, or the Dow Jones has collapsed to 3,000 a share. And that's something too that should be taken into consideration when you hear people making price predictions. So suppose you have two analysts out there, and one guy says that next year the Dow Jones will fall to 14,000, and another guy's telling you that it will fall to 4,000. Well, obviously both analysts could end up being totally incorrect, but if you had to bet on who is a better chance of being correct, the guy that's calling for 14,000 clearly has a better probability simply because that price is not as far away from where we're currently at. So that's something that's a very simple idea to keep in mind. Just understand that as a technical trader, even though I have put price figures on gold and silver, I'm really not a big fan of long-range forecasting. I actually support daily analysis because I don't try to pretend to predict the future. I support analysis over predictions.
David, I really appreciate what you're saying right there, and I totally agree with you in terms of when you make your financial investment decisions, not to be too extreme, and that's something that I personally do when it comes to my own investments. But if you don't mind, I'm going to pull you down that extreme thinking for just a second, because the reality is that we have a massive credit bubble just looming over the global markets, the U.S. economy, and it's from a macro level, it's bound to happen. I mean, we have interest rates potentially rising in the next week, and the debt just growing. And my question is this: are you seeing anything in the technicals? And I know you kind of already talked about it, but with this thinking, are you seeing anything in the technicals that confirm these assumptions that are correlating to what could be a massive correction in the stock markets?
Well, the other thing, too, is it really depends on how you define a correction. You know, the Dow Jones fell 12% or so. I can't remember the exact figure off of its high. I think it was at around 18,350 back in May of earlier this year. We're obviously in December now at the end of 2015. But a lot of people would call that correction. Now, like I said, we could be transitioning into a bear market. And a 2008-like crash, that would be obviously an extreme case. I'm not saying it can't happen again. It could end up being worse. But as far as this pattern here, again, I can't really say 100% as to where we're going to go. From the macroeconomic perspective, that's really not my area of expertise. I make my living as a speculator trading individual securities, but there's no question that we have an absurd amount of debt out there, and I do agree that in the long run, that debt is unsustainable. As far as, like I said, where the Dow Jones is going to go, this pattern is constricting. It could just continue to trade in sort of this coil pattern, and eventually it will probably break out either to the upside or downside. In the shorter term, though, I'm looking at the chart right now. We obviously had that correction over summer, and that was a pretty scary move down, and then it came up, but we are now testing more resistance again. So, in other words, as we bounced off of that low in August, we have not hit the high that was set back in spring. So we could be in for another leg down. But again, these are relative words. So how far is it going to go down from here? Well, it may only go down another 1,000 points or so and rally back. That's something that requires analysis on a daily level.
David, so what does a bear market, what would confirm a bear market at this point?
Well, simply more time would have to pass without the Dow Jones reaching its previous high back in May. And when you talk about a true bear market or a deflationary crisis, the two full-blown bear markets that come to my mind immediately, one obviously was the Great Depression. And if that is the case and we do see a deflationary crash, remember, cash is king. And the purchasing power of your dollar actually goes up. Now, it's going to sound like I'm contradicting the contradictors, right? Because I'm a contrarian by nature, I'm a libertarian, but I think a lot of libertarians are actually against the dollar, obviously. But I don't try to put my personal spin on what I want to see happen. I'm taking markets for what they are. So when you talk about this idea that cash is king, there's no denying it. If you and I, Kenneth, get on a plane right now, we could fly to just about anywhere in the world and people will be tripping over their feet to get their hands on our money. That's just the way it is. Mm-hmm. So where will the dollar go over the next 30 years or so? I have no idea. But as far as a crash, it probably would be deflationary if it does happen. But again, I'm not trying to predict that because we could see an upside breakout here and I would be wrong. But that is my analysis as far as what type of crash would happen. It's a little bit difficult to measure still, though. I've been a lot more accurate, I think, with my calls on precious metals than I have with the Dow.
Well, we're going to get to precious metals in a second, but I wanted to ask you, and maybe you can touch on this, why do you prefer technical analysis over fundamental analysis?
Well, my main reason is that fundamental analysis, it's really another way of saying value investing, because when people value invest, they look at the fundamentals of an individual company, they look at the balance sheet, or even studying macroeconomics as a whole. The problem that I see with value investing is that it's really predicated on this notion that the individual value investor is right and the rest of the market is wrong. So let me explain that. If you have a company that's selling for $30 a share, we often hear a fundamentalist say, well, according to my analysis, it's really worth 60 or 80 or 100. And the problem I have with that claim is they are saying that they are right and the rest of the market is wrong. And that's not appreciating what a market is comprised of. So when you ask yourself, well, what is a market comprised of? It's obviously millions of investors on a global level. Many of these people include bankers, insiders, friends of insiders, hedge fund managers. These are all people that are part of the market. So they have a tremendous amount of authority, and technical analysis has allowed me to adapt to the markets and really remove emotion from the picture. So I like to follow a lot of trend lines and evaluate the markets for what they are. It's just allowed me to put myself in a more comfortable position.
Yeah, I mean, you make good points with all of that. Have you ever heard of confirmation bias, David? Basically,
I have not.
Well, it's basically if you believe something, you seek information that confirms your bias. So whether it's if you're a Christian, you seek information that confirms the things that you believe. Or if you believe gold is going to go to 10,000, you seek out information that makes you feel better about the beliefs that you're making. And it reminded me of this idea, this confirmation bias that's a psychological part of humans, and basically what you're saying with the technical analysis is that you take away this emotion, you take away some of these things that are psychological that may help us or that cause us to make bad decisions with our money.
Well, I was going to make a comment on that. I mean, once people believe something, their literal actions actually can move the market. If enough people do believe that gold is going to 10,000 and they start buying, it actually could. But again, from a psychological standpoint and the mechanical standpoint, this bull market is over as far as I'm concerned. I think the tougher question will be figuring out at what point down the road will a new bull market start, and I don't see that happening for quite a while yet. But that's a really important point when it comes to markets, is that they really can move based on perception. You don't know how far they're going to move. That's where the analysis and measuring actually comes in.
So, David, we got to talk about precious metals. Silver hit 13, I think, roughly a week or two ago for a short period of time. Oil is below $40 a barrel. The dollar has been strong. What are your thoughts when it comes to the resource sector, precious metals, and then let's talk about silver? I mean, we did see it go up for a short period of time in October, and I think a lot of us were prepared for that to be the turnaround, for that to be the start of the next bull market. But with it back at $14 again, silver at least, I think we're starting to question if we really are headed for the uptrend at this point.
Well, I've been calling for $12 silver for a number of years now. It still has not happened. I think the lowest low we hit was somewhere around $13.40 or so on any given day. And in order for this market to turn around, we definitely would have to see more upward momentum, and we would have to see 52-week highs being broken, and we have not been anywhere near that point. So when you're analyzing these minor rallies, it's important to look at the overall trend. Like I said, we're pretty deep into a cyclical downtrend with silver. And when you see these minor rallies up, there are some resistance lines that can actually be applied. A lot of these are just simple support levels from the past, but it's important to be biased with the long-term trend. So if you're going to go long on silver, this is my philosophy, I would wait for a new low. You could even do it now. It's hard for me to say, though, because we did break out another support level. It's about a horse apiece. It could bounce back again. It also could continue to go down. But if you're going to play it in the short run, it's probably pays to wait for a low. That way a minor counter move is actually due. But again, these are all relative terms, and people ask me where I think silver is going over the next several months and years, and I still say lower because nothing has changed from the technical perspective and no major trend lines were broken. That rally back in October, that'd be an example of a shorter term trend line being broken, and sure, it had a decent pop, but obviously nowhere near enough to change the longer-term picture as where we have gone, obviously, since 2011. So we're coming up on 5 years here. The other comment I wanted to make, too, when using your technical tools, I really don't go into a whole lot of detail with people that aren't paid members as to how to apply them, but I just want to make a general comment that you really do not have to obsess over a lot of these momentum oscillators. They should be used just as a guideline to help you. The real way to get good at trading and speculating is to simply put in enough hours studying and making observations. And unfortunately, most people do not want to do this for whatever reason, because maybe they don't believe that technical analysis works, or they just don't have the work ethic. And again, that's a big reason why I created my website, is to help give some people some guidance.
David, is it fair to say that you're waiting for precious metals at this point to move higher, and that you're not shorting it anymore, even though you did say that, you wouldn't surprise you for it to go to 12 and it hasn't? But is it fair to say that you think we're close to a bottom and that it'll likely go higher from here?
Well, that's a tough question. Part of the reason why is because I have my long-term shorts still locked in. When I buy puts, a lot of times I have over a year worth of time on my contract. So I'm just going to keep holding my shorts, because if there is a rally, I'm assuming it's not going to last more than a couple months, and then silver will hit new lows again. Now, if you are somebody that does not have a short position locked in on silver, I would be a little bit reluctant to jump in now, just because we did hit a new low. Like I said, though, this is a particularly difficult call in the short run, at least, just because we did break out another support level recently. So, again, it's about a horse apiece. It might bounce back, but if you are going to go short, I would probably wait for a minor rally back. If you're going to buy, maybe this could be a good time to buy in the short run. But like I said, I don't like to try and trade against main trends. So if I'm going to go long on something, even though you could potentially go long on silver in the short run and have it work out, I prefer to be trading the opposite way. When a stock or individual security is actually trading with strength and has an established trend up, you can reverse the theory and buy in pullbacks and buy off of support levels. So in this particular case with silver, it's hard to say. I would advise that if you are going to go short, I would wait for some type of a bounce up. But this bear market is not over by any means. I think we're still going lower.
Fair enough, David. That's fair enough, and you've been right up until now. So your opinion has a lot of credibility. So I want to move on at this point. You mentioned wanting to talk about this, and it's a really interesting subject. Markets being a zero-sum game. What are your thoughts on this?
Well, a very quick disclaimer here. We're pretty late in the interview, but if there's any financial planners listening, you may want to turn this off because they're not going to like this. But I've made comparisons with the stock market and even the silver market, for example, being a zero-sum game. And what a zero-sum game is, it's a situation where your profits or your gains come at the expense of somebody else. Now, you obviously could have one winner and multiple losers, or one really big loser and a lot of winners. So if you think about poker, for example, chips are being transferred around. And I know people don't like that analogy, but it's true. This is how markets are structured. So let me break this down a little bit more. If you are buying silver right now, silver is roughly around $14 per ounce when we're doing this interview, maybe $14.30 or so. But the only reason you would buy silver now is because you believe that you can sell it to somebody else down the road for a higher price. Unless you own a factory or you're trying to use it for actual industry, which I'm assuming most people that are listening to this, that's not the case. They're looking to speculate or invest, which there's nothing wrong with because I do that for a living. But what I'm getting at, again, the only reason why you buy a silver coin now is because you hope to sell it to someone else down the road for a higher price. That's the only way you can come out as a winner in this transaction. Now, even let's say that we move into some type of a barter economy, which I do not think is going to happen, but let's just say we did, you're still hoping to sell your silver for a value higher than $14 an ounce. So even if you did trade it for a bushel of wheat, a barrel of oil, or whatever, the only way you win is if you exchange it for a greater value. This same basis is true for stocks. Why does anyone buy a stock? Because they want to sell it to someone else for a higher price. Now, the stock market does have one different aspect, and that is dividends. So dividends are obviously proceeds that are coming from the company itself. But I've told people before, making a living off of sitting on a 2 to 3% yield is going to be incredibly difficult. So what I tell people is your main concern should always be protecting your capital. There is absolutely nothing wrong with speculating, but just understand that as cynical as that explanation sounds, that's how markets work. There has to be some type of a winner and some type of a loser in order for the system to work.
Yeah, no, I totally agree. And I don't think anyone would really argue with that. That there are winners and there are going to be losers. And what would be the argument for that? Is it possible that everyone wins in the market? Would that be the argument to what you're saying, David?
Well,
or everyone could win?
The tradition, not everyone can win in the stock market.
Right.
It's literally impossible. Now, like I said, though, the traditional ideology in finance is that when you invest in a company, you're growing your share of America. I think that's a bunch of nonsense. Like I said, you take the 2008 crash, for example, you have a buildup in a bull market, everyone's making money, and those that sell out in time do well at the cost for all the additional people that buy in at a later date. Now, I guess you could go back and say, all right, if you just bought the stock market 50 years ago, and everyone did, and they held on because we're near all-time highs, technically on paper, everyone could be a winner, but at some point they have to sell out. And all that selling could trigger a collapse. And if that collapse occurs, like I said, who knows how many years it would take for the market to recover. So that is the message here is, again, you really can't break it down any way without having people that are making money and losing money in the process.
Yeah. Yeah, no, I just thinking about the economy as a whole, we have presidents out there or, people that are trying to run for president saying they're going to bring back America, saying that they're going to get in there and, fix the debt situation. Many people think this is irreparable where we are with the debt. And when you were talking about a zero sum, if let's say they did do something to bring back a lot of jobs or take jobs back from China, the zero sum in that situation would be the U.S. benefits and the other countries go down. That's kind of my thought when it comes to the zero sum as far as the economy as a whole. I guess, and my only thought, if we were going to see a major change when it comes to the economy, is if something as big as like the internet came out and the U.S. had that as a driver for jobs, or maybe something as massive as Hollywood, or some real big game changer in terms of the economy. But again, it's a big long shot. Just my thoughts on the zero sum.
Well, I agree. And real quick, I just wanted to make one last comment here. Before we sign off, it's not that I don't want to sound totally negative here. My connotation is not meant to be totally negative. There are plenty of transactions in the business world that obviously to some extent are a win-win. You walk into a restaurant and you exchange your currency for food. I don't think that there's a scam going on there. No one's taking a hit. That's a fair transaction. There are jobs out there or industries that really are a win-win that create value. You take an aerospace engineer, for example, who designs an aircraft. He's putting in his labor in exchange for payment, and he designs this aircraft. The owner is making a profit by maybe offering a service in the airline business and whatnot, and there's value created there because as far as convenience goes, a lot of people, thousands of people every day, fly on airplanes, and it makes society more efficient. So I'm not saying that every market in one way or another has to be, someone's winning and losing. There are plenty of good win-win scenarios in the business world. However, I just wanted to be honest and be clear that, okay, if you're going to trade stocks, understand that there are people out there losing, and there's nothing wrong with that. Again, that's what allows me to speculate for a living. Someone has to be paying me somehow.
Well, especially when you go through the times where you lose, and you're like, okay, well, it happened to me. It's okay if it happened to someone else, right?
Correct.
All right. Well, David, is there anything else that you wanted to leave us with before we sign off here in terms of just maybe letting people know a little bit about what they'll receive and what they'll get if they sign up for your service?
Well, at tradertours.com, the first thing you will get is my 5 guidelines to investing. It's a guide that I created that helps break down my market summary and my theory in general that helps people get on the right track. You also have full email support from me. And the email support, not only obviously do you get access to my newsletter, which is sent out generally once every 2 or 3 weeks, but I literally mean you get personal email support. Anytime you have a question, 24 hours a day, you can send me an email, and I usually respond in a pretty timely manner. So it's not this type of deal where you sign up and then I just turn my back. I'm here to help you. I'm here to help people learn how to trade and hopefully get their portfolio moving in the right direction. And you will receive personal trades that are all sent out through the email. Anytime I make a move with my own money, I want to make it very clear so that my subscribers can follow.
It doesn't get better than that. When you're sharing information that you are doing personally, it's the most honest and genuine thing that you can do for your clients. So, David, I appreciate you coming on the show with me today and sharing your insight. Let's do this again in the near future.
Sounds good, Kenneth. It's been fun. Thank you again.